In this next segment, we're going to cover some creative strategies to help you buy in this market with higher interest rates and overcoming the down payment issues. And so what we're going to do today is give you the creative solutions that we're using today to help people buy their first home. I hope it helps you out.
So let's talk about how people can benefit right now in buying a home and what kind of programs that are available out there, Brent, because this is a big deal right now. There's a lot of stuff going on, especially here in Florida with mortgage rates, and let's cover that.
Yeah. So, one of the biggest hurdles, Lee, is the down payment. And so there are programs now. The Hometown Heroes program was exclusively for, first responders, firemen, policemen, and teachers, basically, and medical occupations. That's been removed. This has all been updated. $100 million has been set aside for this. And by the way, over 30% of it has been taken up since July 1st, by the way.
Wow.
So that's something I hadn't talked to you about yet. So very popular. It's up to $35,000 second. That's a second mortgage. There's 0% interest on it. It's non-amortizing. It just basically stays on your home until you either refinance or sell the property. So it really helps cover that first hurdle to purchasing a home. The loan actually can be used for both the down payment and or closing cost, any combination. So it's a tremendous amount of money. It's up to 5% of the loan amount is what the maximum is, and it's a minimum of $10,000. So it's a great program to help get over that hurdle. There are some qualifiers. There's maximum income. You can't make over 1.5 times the average household income in any county. So every county is different. But we're seeing most people, that are having in that first-time home buyer scenario.
Yeah, but that's a 6-figure income in pretty much the Treasure Coast and Palm Beach County. So all the way up through Florida, it's a 6-figure income.
140, 150, right? Exactly.
Yeah.
So max. So it's for first-time home buyers, and most of them would qualify for that. There's a couple new things. A 35-hour minimum as far as a work week. That's what they're looking for in the VOE, verification of income, right?
Yeah.
Verification of employment. That's right. So we need to make sure it's a Florida-based employer. That's the big change. So any employer or an employee that works for a Florida-based employer that has a brick and mortar location here in Florida qualifies to apply for this program. So it's a game changer, and that's why it's going up. It's being gobbled up. Frankly, I see them probably extending it. But it'd have to be funded. But that's
right.
That's what we're looking at. I think it's a very popular program for that reason. We're working on a couple of people that were blown out. We were doing a lot of loans for teachers, and so we're offering this to janitors at schools, that type of thing. They weren't included in it. They kind of felt left out.
Right.
Administrators, because they weren't teachers. So it's any Florida-based employer and your employee that works for
if they own somebody works for a restaurant, they could be a waiter, waitress, because those right now around here making 6 figures. Bartenders, I mean, it's crazy money what waiters, waitresses, and bartenders are making right now.
Right, and a lot of them are showing their income. Some aren't. Those tips.
Right.
But we can do bank statement loans too. That's another hurdle. A lot of times with self-employed people, Lee, we see that all the time, where if someone's been in business for 5 years, that's a real loophole that we can show one solid tax return and get them qualified based on that as well. So there's solutions for these things, both income.
Right. And on this program specifically, though, they can't have owned a home in 3 years. That's the big one. They can be on the mortgage and they can be on they can be on the house, on the title, but they couldn't have lived in it for the last 3 years. Temporary rate buy downs.
This helps a lot of people. We know rates are coming down, right? And so at this point in time, one of the best strategies is with a seller concession, whether it's from a builder or from a seller in a resale type scenario. That concession, let's say it's $15,000, can be used to buy the rate down. There's 3 2-1s, 2-1 buy downs, 1-1 buy downs, 1-0 buy downs, or several different types of programs. But basically, it's taking the amount that you'd save. Let's say you did a 2-1 buy down. So let's say rates were 7%. The first year, it would be 2 points lower, the 2 of the 2-1 buy down. So your rate would be 5%. So they'd calculate the savings at 5% over 7%, and that concession can be used. A seller concession can be used to cover that from the lender's perspective. So it helps buy down that rate for that first year. The second year, it's bought down 1 percentage point. So it'd be a 6% rate the second year, and then it would go to the 7 and stay in the 7% rate from that point moving forward. The strategy then is, with these seller concessions that new builders have and the seller concessions and the resales, it's a great way to make sure you use every nickel of it, because you can buy that rate down during this high interest rate environment we're in. And so it's a great strategy, because we know they can refinance. And if they refinance, they can get what's not used in the concession credit to them at closing. It's actually a credit. So let's say they did a 3-2-1 buy down. They bought the rate, and it's expensive, all the way down to 4% from 7%. Let's say they're in it 2 years. The remaining savings on that last year would be credited to them at closing. So they actually get the full benefit that a concession, no matter what they do. If they refinance or they sell the home, they're still going to get the benefit of that concession.
And then on this, especially now, seller credits are back at full swing. I think I read an article the other day. It said 60% of all sales now have seller concessions. So seller concessions are back, and I know with our listings, people are asking for it, and they're at their magic number is 3%, which is pretty much what builders are offering. So on the resales, builders, they're asking for the 3% because that's what they're being told by builders are giving up. So and that 3%. That 3% would buy this rate down on a 2.1, right? A 2-1 buy down, right?
2-1 buy down, absolutely would, right? So you get that payment as if it was a 5% rate. Let's say if the market's 7, let's say if it's 6.75, it would be 4.75 today. So on a 2-1
so you just
buy down,
need your down payment, your closing costs, get the concession from the seller, and buy the rate down.
That's right.
When they get approved for the loan, they're getting approved at the highest rate, though, correct?
That's correct.
So they're not getting in a situation like these ARMs and things like that. They're qualifying for what they know, what the real rate is, and they're just getting a lower rate.
That's exactly right. That's exactly good point, Leap. So they qualify. In other words, we're not stretching that borrower's ability to pay at all. They're
right. We don't want to get people house poor. Oh, talk about, before we go this slide real quick, talk about situation with the reverse purchase. Well, most people know about a reverse mortgage. You can explain that a little bit, but explain the reverse purchase, because this is a really neat program you have. And it really, for folks moving into Florida, retired, they can do a reverse purchase if they want a little bit more house than what they sold, because Florida real estate's starting to catch up with the rest of the country now.
It's a great program, Lee. What we do is we're seeing two things happen. When someone retires from, let's say, Ohio, and they move to Florida, two things happen. Their income stops, right? And they can't qualify for income, use that income any longer, because it doesn't exist. They look at the lenders look at what your current income is. And then you're selling your home, and you have this cash, and you'd like to keep some of that cash. You don't want to use all the cash to put down on a property necessarily. So what we can do is we can actually take, let's say you have a free and clear home, it's $500,000. You sell it for cash, and you have $500,000. You want to move and you want to purchase, and let's say in Tradition, and you found the perfect home. You don't want to put all your $500,000 down on your property. You want to maintain some type of padding there for reserves and emergencies, that type of thing. Well, a reverse mortgage is not just for refinances. It's not like the last stop, before you sell your home or, leave this earth. It's actually a financial instrument where you can put, let's say, $250 down. You take half of that, put $250,000 down on the property. You retain the $250,000 in cash, and that's your padding, for emergencies. But there's no income qualifying. If you don't have a job, if you have Social Security that pays the taxes and insurance, you can qualify for that loan. The whole idea of paying cash is so you don't have a payment. Well, with a reverse mortgage, you don't have a payment either.
Right. And the biggest fear in the reverse mortgage is, and this is what I hear from everyone, is they're going to take my house. Right. And I have many friends that have reverse mortgages, and you've done tons of reverse mortgages. they don't take your house. Tell them how it works out. The house is yours till you pass away, and then it would will to your children. Tell them how that works.
Yeah, there's many options. There, you have 6 months initially when you pass away or leave the home. And so your heirs can refinance the house. You could sell the house. Any number of options that way. As far as whoever you want to give the property to, you have to refinance any balance though. Then you can give a gift of equity. In other words, the home is going to be worth. Let's say it was $500,000. 20 years later, it's worth $900,000, and the balance has gone from 250 to let's say 450. There's still equity there. You can give a gift of equity, and they refinance the 450, and they're fine. Or you could sell the property. You have 6 months to do that, and then
when you sell the property, you get to keep the profit. You just have to pay. It's just like paying back a regular mortgage,
right?
The same way, but you just have to pay it back, and you keep the rest of the equity.
That's right. You still are on title. Nothing changes that way. The only thing you do have to do, you have to pay the taxes and insurance, and that's true of any home you own.
Right.
So
and you got to keep the residence up.
You have to keep the residence up. You can't let it go into disrepair. So those are the things you need to do. And there's all sorts of qualifiers. It's a government-based loan. So they're very careful to make sure this is a product that's good and it's appropriate for the borrower. And it's not putting someone in a difficult situation. They're very careful to do that. So that's why FHA came in and started insuring these loans. So there was some abuse years ago, and that's where you get some of the bad blood and the rumors that they want to take your house and things like that. So after that first 6 months, once you pass or go into a long-term facility, there's additional 90-day extensions that can be applied for that are pretty much always given, frankly, up to a year to resolve the situation and close out the estate, or to sell the property or give it to one of the heirs, have them refinance it. Several options, but that whole time you don't have a payment. So the reason I'm hearing people coming down there and they want to pay all cash is they want to not have a payment. Well, with a reverse mortgage, you don't have a payment either, and you still keep your reserves and savings. And some people are pulling and paying taxes on IRAs and retirement accounts too, because there's a tax when you pull it out. You can leave those intact and growing for your heirs. So there's a lot of different strategies. You definitely want to talk to your financial planner, tax advisor for those types of scenarios. But from the mortgage perspective, it's a great tool to have plenty of reserves in your retirement, not be house poor where your house is paid for, but you have nothing left. So I love that program. We're seeing more of that, more interest in that as people begin to understand it, and some of those misconceptions and myths are corrected. So
yeah, I think if this is something people can listen to, they can reach out to you and talk to you about this, and you can share more with them. But I think it's a great program, especially with moving to Florida. Let's say you're moving from somewhere and the house isn't as much, but you're getting priced out of the market, where we have clients coming down right now and they're cash, but they're right there on that edge. And if you're trying to buy something new, the bottom of that, unless you're buying a townhome, is about $450 now. So it's not cheap like it was. We don't have $350,000 homes falling off everywhere anymore. Port St. Lucie's gotten expensive, and if you come into Palm Beach County, it's really expensive. Really good way for people to be able to get the home they want and not have a payment. And that's what they're looking for. They're looking for not having a payment.
And I'll tell you what, there's one other attribute of this loan that most people don't talk about. You get about half of the funds up front, and then you can get an equity line of credit that grows at the CPI rate. In other words, I'm just doing one right now. She's going to receive $119,000 in a credit line that's going to grow. If she doesn't tap into it, it grows right now at a rate of 8.5% per year. So in the event of an emergency or something like that, she has that equity line to fall back on. And I don't know about you, but I owned a house in 2008, and we had a second mortgage, a line of credit, and everyone that I personally knew and talked to, they'd all had their equity lines canceled. I had a friend of mine called to extend it, to increase it, and he goes, "Thank you for calling. We haven't called you yet. We're going to eliminate it." And they eliminated it right when he wanted it. So because there were bargains to buy and things like that, so he's looking to purchase real estate because it had dropped. So that 2008 was a different scenario. So
we're definitely getting back into that situation now with the debt being so high and the Fed tightening up.
$120 billion of debt is going to be auctioned this week by the federal government in 2, 5, and 7-year treasuries. That means $1 million, 120,000 times. That's how much debt we're auctioning off this week. You know, it's nice to have that locked in, and it's government insured. So in other words, they can't change the contract. They can't.
Right.
And so it's a great long-term strategy to know that you have a padding to fall back on, reserves to fall back on, that credit line if you need it for education of, you know, children, that type of thing, emergencies. And so,
or just retire and be happy, not have anything to worry about, and be in the house that you want to be in. I mean, I'm watching folks these days with especially new construction really trying to pinch the penny and get into the house that they want, and they're ending up buying less than they wanted. But with this, they could get what they wanted and still have no payment. So it's a great thing. People, like anybody listening to this, should definitely reach out to Brent if you're interested, or you have a family member that is interested, or they're trying to move down. Definitely something to look at. You have some cash in the bank, you don't have enough to purchase, definitely something to look at. If you're over, and in the years and age is what it's
62.
What's the age? 62.
62.
62.
Mm-hmm.
So you're almost
62.
there.
I'm almost there.
You can do a verse mortgage pretty soon.
I will.
That's
the plan. That's the plan.
With all those kids that you have, you just keep tacking them on.
That's
Might
right.
end up with 2 or 3 more over the next year. I don't know.
That's right.
Your wife keeps bringing children home.
I know she does. I don't know what's up with that. I hope you found this information helpful. If you did, please subscribe to our channel and ring that notification bell so you won't miss any of our future videos. And we'll see you on the next one.